Thank you, everyone that is joining us. I know we have people, as usual, from all parts of the world. So good morning, good afternoon, and good evening, wherever you are. Thank you for taking the time out of your day to join this discussion. So bit of context. So I am joined today by Mohammed Ammar and Hani Nagar to discuss what it looks like to navigate your taxation structures and your compliance in Saudi Arabia. So it's a bit of an interesting topic. It's something that a lot of companies, once they're setting up, or maybe even long after they set up in Saudi, they might either oversee, overlook, they might misunderstand. It's a bit tricky. So I am very happy to be joined by both of these experts and maybe understand a bit more about what should I really look out for? What happens if I don't look out for it? Understanding a bit more about what do I need to look out for, generally speaking. So, without further ado, maybe we can start off with a bit of introductions. Ammar, we'll start from you. Could you please introduce yourself?
Thanks, Mina. Hey, everyone. Hope you're all doing well. Thank you for joining the webinar. So as you all heard from Mina, my name is Mohammed Ammar. I'm the head of business growth services at AstroLabs. So basically overlooking all kind of support for post-incorporation, which includes mostly compliance related to your government relations in Saudi, and also how businesses can further, employ, recruit, and all kinds of other supports in your business expansion journey in Saudi.
Thanks, Ammar. Hani, we'd love to hear from you. Who are you? Can you tell us a bit more about the firm?
Thanks, Mina. So my name is Hani Nagar. I'm Associate Tax Partner with the WTS Dhruva Consultants, focusing more in Middle East and GCC country. We as Dhruva, as we are a tax boutique firm, focusing on tax, including, of course, UAE, KSA, Qatar, all countries in cross GCC and Middle East.
Thank you very much, Hani. We're glad to have you here. We're really looking forward to learning a bit more about this topic. So, all right, let's maybe just dive right into it, right? And by diving right into it, let's maybe lay the groundwork for this conversation. Ammar, I'd like to start asking you a question, maybe to give clarity or context as well to everyone here. We have worked with a lot of companies, well, over 700 companies that we have set up in Saudi Arabia, incorporated them, got them ready to go, right? And, a lot of the time, people who are joining or we speak to, we draw a good picture of what it looks like to set up. But can you paint me a picture of what does it look like once you're set up operationally, right? From an operations perspective, on ground, your team there, what does it look like once a company has been incorporated, is set up, and starts to operate after what we call phase 3, right?
Absolutely. This is actually a very good question, right? This is where we try to educate and give knowledge to a lot of people, because yes, it's one thing that you've set up, you've finally done a great milestone, you're able to operate in Saudi, but there's so many things that you want to basically, understand, encompass in terms of maintaining your entity, maintaining compliance, and making sure it's still allowing you to continue your business in Saudi, right? So these are the things that a lot of companies sometimes don't either pay attention to or are aware of, or even spend time in, investing and understanding. So there are multiple components when we talk about this. So it's about, you want to make sure that you're compliant with the key regulatory set by the government. So you have these government portals that are now activated, that are being, you can say, governed by Ministry of Labor, or, for example, Ministry of Commerce, or some of the other ministries that are core and essential to any business. So to give you an example, very important to keep compliance on your employee contracts. So anyone that's in a company, especially even the GM, if he's the GM in the company, he's the main owner or an entrepreneur, he needs to make sure that he has a work contract. Being compliant, he's processing his salary on a monthly basis for not only him, and if he's employing anyone else, you need to have a proper wage protection system that is being deployed, and payroll rolls are happening on a monthly basis. Their compliance is necessary to the social insurance, which is a mandatory compliance that everyone needs to pay for all employees that are under a company sponsorship. But these are just the basics, right? And then you move into your employment overall, how you're taking care of their contracts, their benefits, their well-being within the kingdom, allowing them the visas. And then you come back to compliances that help you make businesses. So if you're working with the government or semi-governments, they're always going to ask you for these compliance certificates known as Saudization certificate, whether you're meeting the requirements, the GUSI certificate, whether you're still compliant, paying your social contributions. That allows you to submit tenders. All these compliance certificates will eventually help you submit tenders with these government bodies and even keep on working with them. And then finally, you wrap this up with your annual. So once you complete your first year, if you're maintaining your compliances, you're able to renew your licenses, you're able to renew your work permits, even the GM himself, so he can maintain his business. So a lot of the times, it's a fun fact that I just received a call, from a client a while ago that they didn't maintain their work permit or IQAMA, and now they're not allowed to access any portals. They don't have access to bank accounts. They don't have access to anything. So imagine having a company for more than a year, and then you have no access to it. So this is exactly what can happen if you're not compliant, not following the rules and regulations after you've done such an investment in such a good growth market such as Saudi, right?
Yeah.
Obviously, there's so many details we can get into, but I think this would
It's
hopefully
a lot
answer
to
your
consider.
question.
I mean, yeah, it's a
Yeah.
lot to consider for sure. And it doesn't fall into just one department within the company, right? There's multiple
No,
parts of the company that have
absolutely.
to handle multiple different aspects of operations in Saudi. And I don't imagine all this information is stored in one platform or in one sort of Google sheet, right? It's one of those things where you know, or you need someone to tell you, or you have to do a lot of research or have a
Exactly.
right?
Exactly. So either you have like a very knowledgeable person in the team who's going to have to take care of this, of different documents he's storing. It's also about being up to date, right? We always see these news coming from Saudi and different platforms, but then it's one thing: when do they get implemented? And then what are the other options? Because even when Saudi announces these new rules and regulations, there's always a background, right? You have to go in the
Definitely.
details, understand what's affecting, and then modifying or coming accompanying to them, right? So
100%.
it is take some time. Yeah.
100%. And I think one thing that maybe we touched upon a bit when it comes to staying compliant, that we've definitely heard a lot of companies not easily navigate is taxation, right? Because
Absolutely.
some markets, if you're looking at the UAE, it's a bit simpler, right? Foreign markets can be more difficult, but Saudi has its own methodology. And so, Henny, here I'd like to maybe direct this conversation to you when we're talking about taxation. I have a couple of questions actually, but maybe let's start the first one. If you could just break down, what does the taxation structure in Saudi look like for companies that are looking to set up?
So, Mina, Saudi, they have a unique tax system in the region. So they have two systems. One, it's the tax system, and another one, it's zakah system. Tax, it's applicable for non-GCC or non-Saudi citizen. So ever any companies are entering to the Saudi market, if they have a shareholder or the owners non-GCC, then it will be subject to corporate income tax with 20%. Okay. For GCC and Saudi citizen, they will be subject to zakah, which is a religious levy, and with 2.5%. Of course, tax and zakah is different from the calculation perspective. Each system has a different mechanism, different process. One filing, one tax and zakah filing, but inside the form itself, it's split between tax and zakah.
Okay.
Maybe someone can ask this question also. Okay, assume that I have a mix between foreign and GCC or non-GCC
Yes.
and GCC. So he
Yeah.
will be subject to tax and zakah based on the percentage of ownership. So if you have a 50% as a non-GCC and 50% GCC, then he will be subject in Saudi, 50% subject to tax with 20%, and 50% will be subject to zakah with 2.5%. Of course, 30, 40, whatever the percentage, he will follow the same mechanism, same rules. Saudi also, they have withholding tax system in place, meaning that any foreign payments related to non-goods payments, it will be subject to withholding tax. Withholding tax in Saudi, it's from 5 to 20% based on the category or the service or the nature of the payment. So as an example, if we have a dividends paid from Saudi to outside Saudi to another country, there is 5% should be withheld from the payment. If we have interest payment, there is a 5%. It can be reduced based on the tax treaty. As an example, also Saudi and UAE have a tax treaty in place now, double tax treaty. It can reduce the withholding tax for interest payment from 5% to 0%. Of course, there is some condition criteria need to be met. Management fees, it will be subject to 20%. Consultation advisory fees, it will be subject to 5%. The important point also need to be highlighted here in the withholding tax because it's a very, very important one from my perspective, of course. Before, Saudis, they have a system or a mechanism for related party payments. So
Okay.
for any related party transaction or payment, it have been subject to 15%. Okay, withholding tax. Now, based on the recent changes in Saudi, they are withholding tax based on the nature of the service rather than related party or non-related party. So if there is a payment to related party related to advisory or tech service, that will be subject to 5%. If there is no definition, it can fall under 15% as a withholding tax. Some countries, they have also foreign tax credit regime like UAE. So withholding tax deducted in Saudi can be claimed in UAE as a credit. Again, with some certain condition. One of them shouldn't be higher than 9%, which in UAE is the corporate tax rate. And double tax treaty shouldn't be in place. And the company should provide to local authority in UAE that this entity as a resident entity in Saudi. So by releasing a tax residency certificate from the governmental authority in Saudi to governmental authority in UAE. Okay.
Okay.
In addition, Saudi also they have a VAT system, value added tax,
Yes.
applicable of course on any sales as output tax, whatever sales you have inside Saudi, then you need to apply 15%. It was before 5%, but it changed from COVID days, if you remember, and it's still 15% now. They also have the mechanism of claiming input tax. So any tax already charged to you as a company related to your business, you can claim it as input tax from output tax. Sometimes you can input tax can be higher. Then also you have the right to claim it as a refund based also in some criteria, some condition.
Mhm.
This is the main feature of tax
The
system.
main structure. And it's common that we see that a company would usually fall under all the different kinds of tax, right? Or is it that maybe a company would only be subject to 2 or 3 of these and not all of it? Or is generally they're always subject to all of it?
VAT is general one for all.
Yeah.
Withholding tax, also again, if you are doing, if you are processing any payment from Saudi to outside, then it will be subject. But
Mhm.
again, I keep emphasizing for non-goods. So if you are paying in relation to goods, there is no withholding tax.
Got
Okay.
it.
But service, dividends, interest payment, whatever, rather than goods, then it will be subject to withholding tax. Tax and zakah, as I described, it can be
Yeah.
both. It can be one of them. It
Well,
depends.
depending on the shareholder. And this is, the tax and the care depends on the shareholder of the company rather than the GM, and it's the shareholder of the home expanding country that's licensed now in Saudi Arabia. It's not the GM, it's the
No,
shareholders.
shareholders. Even you need to go for one layer above for ultimate shareholder. So does it mean you have a UAE company opening a subsidiary in Saudi? You shouldn't say automatically it should be subject to zakah. You need to check also who are the shareholder in this UAE company, because
Understood.
Zatka, which is a tax authority in Saudi, when you register the new company or even that during the audit process, they will ask you, give me a proof who are the shareholder, who is ultimate shareholder. So the tax
Understood.
should be very careful about this one.
Understood. And so thank you for that breakdown, and which is a great start to my second question, because I know that there's been some recent updates in Saudi taxes. Like you discussed, VAT was 5 to 10% back in COVID time, but recently as well, there's been a few more updates on the taxes. Could you walk us through at least, the most critical or most impactful ones that most companies will be subject to that they should be aware of?
Yeah, sure. Let's first highlight that Saudi now they are discussing a new income tax law, which will be applicable to corporate or companies, not individual, of course, not a payroll tax. Okay.
Mhm.
So the main feature of this for this new income tax law, it's totally different from what we have now. They already introduced many other aspects. They are introducing also some special treatment, or not special treatment, tax treatment. Okay. If you go back again on the same discussion for the proposed amendment tax or CT law, they have I can see 9 pillars for the changes. So they have now introduced a different definition of residency and who are subject to tax. They are also highlighting the source of income. They are focusing more in permanent establishment. Permanent establishment that, in summary, if you are performing some of activity inside Saudi from foreign company, it can create a PE or permanent established for this foreign company or foreign entity.
Okay.
So the income from this foreign entity, it can be taxed inside Saudi. There is many discussion, many changes, many appeal, many process happened before in permanent establishment until now, as we speak even. But for the proposed income tax laws, they try to fix some of these gaps by expanding the definition of PE and trying to more clearly for the taxpayer. They also focus more on related party transaction because it's linked to transfer pricing. They are also focusing more or trying to enhance, not enhance, to give more clarity about transfer pricing. They also introducing something interesting, which you call participation exemption. It's already introduced in UE. So participation exemption, there is some exemption can be granted to the company by receiving dividends or capital gain based on some condition. It was not there before clearly, but now they are introducing in the new income tax law. They are trying also to be in line with Pillar 2, the minimum tax or top-up tax. They have introducing also anti-tax avoidance procedures or rules. And they are trying, they also introducing something like capital gain for non-listed company. and merger
Okay.
to merger. So many aspects on the new income tax law now they are introducing. It's already released for public consultation and closed for consultation, and we are now waiting to be officially released. Okay,
Okay.
this is one.
In
Number
a
two,
nutshell,
yeah.
would you say, sorry, a quick question in the middle. In a nutshell, would you say that the tax system is getting slightly more complicated? There are more layers being added or more layers being taken away, or are they adding some, taking away some?
Yeah, I can answer this one saying that technically yes, because there is some high technical points or technical treatment now introduced in the new income tax law in Saudi. They are trying to fix some old issues by avoiding this appeal process, which happened before many times, by introducing clearly in the new income tax law. So yeah, I can say technically yes, I can answer technically yes, but let's see, because it's a draft law, maybe they can remove something, they can add
They want
something.
to move a bit.
We don't know, but we are waiting for the final official release to be released.
But it's a good time to have a tax advisory firm by your side.
Yeah, it's always should
Oh,
have. No, not now. Also, withholding tax percentage already changed recently. Like I mentioned before, like highlighted now before, the related party now and become based on the nature of service, not based on the related party itself as a definition.
mhm.
What else? Also, there is a new Zakah regulation already introduced. This one officially introduced, so it's now in place. Of course, the new Zakah regulation, it will not. I will not able to cover because it need
Yeah, of
many
course.
sessions, not only. But this is one of the important updates happening in the Saudi market. The taxpayer should be aware also and check what is the impact for the business they have in Saudi. Important point also in relation to the same for the Zakah. Zakah or Saudis introduced transfer pricing to Zakah payer. Before it was only applicable for taxpayer. But
Okay.
now it start to be applicable for
So
Zakah
it's a
payer as
better-
well. But they put it in phases. So for phase one, which started from January 2024, they put some brackets. So below 48 million transactions with related party, it will not be applicable. Above 40 million, it will be voluntary. However, above 100 million, it's mandatory. So any Zakah payer, they need to check also from TB changes or regulation happen now in Saudi. Will he fall under the mandatory bracket or voluntary one, and when and what he should do? Because TB, of course, it's not easy topic to avoid to avoid or not to discuss it or not to investigate more.
Okay. Very
Also,
clear.
yeah. So this is the main update from tax side. However, there is a very two important update also. It's a mix between regularity, legal, and tax. One of them is regional headquarter, and the other one is a special economic zone. Okay,
Mm.
so regional headquarter, maybe all of us keep hearing this RHQ, RHQ, RHQ in
Yep.
Saudi.
Yep.
Yeah, so RHQ in Saudi, in summary, again, the Saudi government, they are encouraging the company or the investor to move their RHQ to be inside Saudi. So to encourage them, they give them some tax incentives, right? So tax, in addition also to other non-tax incentives. As an example, they give them exemption from the Saudization for 10 years, which we already know the Saudization requirement in Saudi.
Yeah.
For visa, work visa, there is no limit. From day one, you can get 250 work visa, not like other companies or other companies fall away from RHQ. Uh, the incentive, mainly tax incentive for corporate tax, it will be 0% for 30 years. Also, withholding tax on payment, which I described now, it will be 0%. For VAT, also there is exemption. Double tax treaty, it will be applied, even there is some payment can be subject to withholding tax, so you can apply for tax treaty and reduce the tax rate. So all of this incentive granted to RHQ from Zatka in Saudi. However, they put also some condition, like you need to meet some condition from regulatory perspective. You need to choose one mandatory activity and three optional activity. You need to
There's a lot of
maintain.
details. Yeah, I'm sure there's quite a lot of different technical details that a lot of companies would have to sort of understand, right? And I'm imagining every company will probably have a different situation or a different condition than the rest, right? It's not exactly the same.
Exactly, exactly.
Definitely. And I think
Yeah.
I think this is a good point. Like we will definitely share your contact with everyone. So I think everyone, if they have like the details that would
Yeah,
fit
agree,
them,
agree.
very good.
In
100%.
addition, special economic zone, Saudi introduced also four special economic zones will
Yes.
also other tax incentive. Also better also for any company to investigate or discuss which
Mhm.
best structures they can follow. Okay, very important. I keep emphasizing on the permanent establishment because now there is a new guideline or a new clarification released by ZATCA on VE, permanent establishment, and it's very, very critical for any foreign investor entering Saudi market. He need to understand what is the BE, what is not a BE, what is the process, what is the risk, and how he should mitigate it. Okay. E-invoicing in Saudi already there, very important also update. It's already implemented in phases, which are called Fatura in Saudi. Also any company need to check about the requirement of Fatura or e-invoicing system, and because it's mandatory now. And yeah, so this is, I think this is from my perspective, major update in the market now.
All right, sounds good. Thank you, Henny. I think that was definitely very insightful. I think there's a lot to uncover with these updates. Tax is generally a very, very sort of dense topic, right? There's a lot of aspects to it. Thank you. But you did bring to mind something that I'd like to go back and ask more about, because when we talk about all these different taxes, and it brings to mind what happens if you don't do that. But then it brings to mind as well, Ammar, I'd like to ask you about all the different compliance aspects that you discussed, right? We know that if you don't stay compliant with quite a few of them, a company is subject to fines, and the fines vary, right? All the way from 1,000 Saudi riyals to 500,000 Saudi riyals, right? Like depending on the fine and the duration. So
exactly.
Could you walk me a bit through maybe what are some of the most common reasons that companies generally get fined?
Absolutely. Look, I mean, with Saudi, when you're maintaining compliance, yeah, these things comes. I mean, depends on the severity, the number of like occurrences. I mean, this can build up, right? So the more you've been uncompliant, not been following through, the fines and penalties will go on, and they end up leading towards probably blockage of your services or your company. But if you're talking about what are the most common ones, for example, you can start as small, for example, not paying your social insurance on time, right? So if you're not paying your social contribution on a month-to-month basis, it starts with a small penalty, and over a period of time, it starts developing fines, additional fines, and then it ends up blocking certain services, like not being able to recruit people or hire or enter them in the system, right? Same thing follows if you're not compliant with, for example, Saudization. At some point, you'll end up going in the red zone, and avoids a lot of different things in terms of hiring and regulations. We can also talk about, I think there are some definitely tax penalties and fines that also come into if you're not paying your taxes on time. All these things do, accumulate, and they end up becoming a bubble. And if you're not looking into it, it starts coming back into all your entities. Because one thing about Saudi is that they somehow connected all the government portals together, right? So the data is being flowing around, right? So it's what we say is, as for the latest data, it's 97% digitized. What that means is that almost all portals are connected and fetching data from each other. So they do at times have the control or ability to track and understand what's happening on each of the portals and where they can control. So if you're not doing well on one, they may even put blockages. So this is something that is very severe. So it may start small, but it ends up becoming very severe for your business.
A lot of different portals, a lot of different government entities that you have to generally deal with.
Absolutely.
And one more thing I know. So whenever you're expanding in Saudi, right? Correct me if I'm mistaken with this one, but your company generally stays in like a range or a status, right? There's the green zone and there's the red zone.
Yeah.
So you obviously, right, just by the sound of it, you don't want to be in the red zone. Okay. So can you explain maybe what are perhaps some of the reasons companies generally fall in the red zone because of it, right? What does it mean? Perhaps maybe we can give some context to our attendees. What does it mean to be in the red zone? And what are some of the most common reasons that make you fall into the red zone?
Absolutely. So one of the complaints is Saudization. Saudization is almost as it sounds. It's in a company, how many Saudis do you have, Saudi employees do you have compared to non-Saudis, right? Or so when you're in a company, let's say you have one Saudi and two non-Saudis. So this is basically, now you need to calculate your ratio. So each company or each, you can say, commercial CR that's been issued out has their own compliance, has their own ratio to maintain. Now, those are to be maintained based on their business activities, right? So a couple of common reasons why people do fall under that radar is very simple, they haven't hired the Saudis required, right? They either haven't hired any Saudi employees at all, or they may have hired, but not equivalent to the required ratio, right? And this is very easy for them to then fall under the radar. Now, what really also happens is at times people are not really calculating or understanding that very well. They're not able to, understand the metrics, how it also changes, because it's able to change from a small company to a medium company, right? So it's one thing when you're under 6 employees. It's another ratio when you're above 10 and then above 50 and then 100. So it's a bit of a variable component. It keeps on changing its percentage. So that's also very common, people not being able to understand or adapt or even pay attention very closely. And by the time they realize they're in the red zone, and now they're not able to either hire, renew, or do any labor-related activities, which then brings them back to how to rectify it. Another issue is the business activities itself. So you may have multiple activities on your CRs. You could have 3 or 4 activities on your CR, but you may not be using or performing all those activities. So some people go like, it's okay to have them on my CR at least, as a safety. But if one of those activities has a very stringent salarization ratio, that is the one that will be utilized on the portal. So for example, if you have 4 activities, one of them has a ratio of 1:1 and the other has 1:14, that portal will automatically select the 1:1 because it wants you to come strict to the one which is the most strict, right? So if you're not managing your business activities, you end up in a place where you don't want to be because you may not even be participating on those services.
In that activity, but you still fall under it. And just to clarify, do they pick the most dense one activity within the license or within the activities that you've chosen for your company?
Within the one that you have chosen on this commercial registration, on the CR. So in the AOA or the licenses and behind, you may have multiple access, right? But it's the ones that you really told them on the license, the CR itself, that, hey, I'm going to perform these, right? That's what they're going to go for. So that's a very common thing that we've seen people. So it's good for having awareness, right? And then, I think it's just being aware of where you need to hire people and how many and when, and be planned. If you stay too long in the red zone, it could cause further complication. We can go back to our first point. What's the worst that can happen? If you're stuck in the red zone for 8 weeks or more consecutively, you'll end up in a traditional zone of calculation where it may take you up to 26 weeks to come back to the green zone, even if you ended up hiring a Saudi national. So it's because you've been non-compliant for such a long time, they put you in that box and they're like, now
you're your way back in.
Exactly. And that's the kind of thing that people want to be cautious of and really be, monitoring the status very carefully.
Interesting. And okay, so I think maybe then I have a couple of questions that maybe I could ask both of you at this point here. We understand sort of now, the updates of the taxes. We've understood what the green and the red zone mean, the reasons to why a company could get fined. But let's say operationally, right? Let's take it maybe a step down to the tactical level. And this question is both of you, what are perhaps some of the biggest operational challenges that we've seen companies facing? Maybe Hanya, I could start with you. Operationally, what have we seen with that in terms of maybe managing taxes? If a company manages it internally, let's say.
So Mina, maybe we can split it in 2 parts. So first part on that if the company are entering Saudi market, okay? As other part, which already there, as company already set up or established there. So first one, operationally dealing with Zatka, it's more easier than before. However, the company should be very careful when they are approaching or applying for any, as an example, for registration. We noticed many times that as a taxpayer or the company, they are choosing wrong setup from tax perspective. They are choosing different short financial period rather than long period, and he's not aware that choosing short period, it will result in filing tax return earlier than should be anticipated before. So he can fall under penalty unnecessarily, right? But operationally, once he starts operation in Saudi, there is some operational or tax issues that arise, especially forget about filing because it's the easy part. If I miss the deadline of filing, there is a penalty will be imposed. So everyone can be aware about this. He can read it, he can know the penalty based on the tax type and the filing. However, from my personal perspective, it's more important for following a wrong tax position or tax treatment. After a couple of years, can end up paying bigger taxes plus penalty. So, so as an example, he claimed some expenses in his corporate tax return or even Zakat return, and later when he have an audit, the auditor found that these expenses shouldn't be claimed as expenses. So they need to adjust his taxable profit, and of course will be resulted in for tax liability plus penalty, right? So penalty, if you can imagine, after 4 years, it can reach to 100% from the tax amount itself, tax liability itself. Very important point also for transfer pricing. Transfer pricing audit now become very active in Saudi. So whatever transaction the taxpayer have or company have with the related party should be monitored, controlled very, very carefully. Because a small miss can lead a huge tax exposure or tax penalty. You can calculate it mean if I have a transaction with the related party with 100 million SAR, okay? 1% from this 100 million SAR, how much? Not a
1
small
million.
so you can measure if I have a 1 billion, how much? 100 million, right? So
That's
it's not easy. It's not easy.
not a small amount, for
Yeah,
sure.
small amount, and of course it will result also in extra cost. So I'm a tax advisor, but I'm telling you that he need to engage a tax advisor to fix this issue. He will be
Very
with
true.
our
Very
cost,
true.
right?
We've seen it. We've seen it. We've definitely seen like a lot of companies usually, they always like to take the route of trying it out. And some of them are able to, but then a lot definitely come back asking for support. Because even if you can, it's quite a lengthy process. There's a lot of things you have to employ, a lot of resources to be able to do it correctly, and not face any issues. 100% agreed, Henny. Thank you. Thank you for your input.
Remember also quickly, remember
Yeah,
when we started the
please.
discussion about tax and zakah?
Yes.
So maybe also he can approach wrongly Zatka, and he should have been subject to zakah, and but because he took a wrong position or provided wrong information,
Paying
he became
20%
subject to
instead of,
tax.
sorry,
So to
paying
fix it,
20% instead of 2.5.
away from tax leakage, which you already lost, to fix it, it's not easy with Zatka because you need to convince him to provide a case, and it's not easy.
True.
So
True.
it's a setup process, and after setup process, both of
After the
them
setup
be
process.
should be factors.
100%. Thank you very much, Henny. Or one quick operational challenge that you've seen in your time.
One, putting out one is very difficult. I mean, there's so many that I've seen. I mean, but I think like let's take a couple of them. Like I think we've seen people, for example, like we've had clients that basically haven't looked at their portals. They haven't had anyone looking at it, and they went to that red zone, and they're stuck in that 26-week loop, and they end up, like wanting to hire someone for their BD or in order to basically start work in Saudi, and they can't. Now, what they need to do is hire 2 or 3 Saudi employees, which is now going to cost them 3 times more than that would have costed them if they were compliant at the beginning, right? For instance, another operational challenge we've seen, like there could be minor or tedial mistakes made on the portals, which then cost companies, like a lot of money in terms of getting them right. So for example, if you haven't entered your QA contracts or your employment contracts or even details on your payroll correctly, you can end up, paying fines and liabilities because you're not showing the right transaction. And when you went to rectify it, you're now eligible for penalties. So these are some basic examples of how I've seen even small negligence. Like, for example, another one, we've had an instance where, one of the employees forgot to sign a contract, for example. I mean, it comes, that means that the guy's never been onboarded, and 2 or 3 months later, like, hey, you're paying someone salary, but he's not even in your system. So another issue for you to raise a new way. So there's been so many issues, right?
Been a few, yeah. Well, thank you, Omar. Thank you, Henny, both. I think it's been very insightful. Thank you both of you for your time. I think we're ready to go into Q&A. I see we have 1 or 2 questions. Before we do, we have a quick poll we'd like to launch our attendees. If you could just take a minute to just answer the polls while we continue with the conversation, that would be very helpful to us. It will also help us understand your requirements better, your situation, so we can see how we can support you better. So, help us help you. Thank you. I'll take a minute of your time. I do see we already have a question here. I think, Henny, this one might be for you. So Ajaz is asking, he's setting up a non-resident company. Do I need to register for VAT? My business is likely under the threshold of 100,000 US dollars.
No, so as long as the threshold below 100,000 US dollar, no need to register. However, you can register optional if you predict or you forecast some input tax to be claimed. So if there is some expenses to be incurred and there is a VAT to be charged to you, so then you can register as optional, not a mandatory, and you can claim this as input tax. But from legal perspective or from regulatory perspective, as long as below 100K US dollar, it's not mandatory to register.
Okay, clear. I hope that's a bit clearer. But just also asking that the guideline says not eligible for registering for VAT. So I guess
he's
yeah,
just confirming that this
covering that part. Yes.
understands correct. But again, assess if there is a benefit for you to register and claim input tax, do it. If not, there is no obligation for you.
Understood. All right. If we have any more questions, please feel free to reach out. Otherwise, in any case, we will be sharing contact details after this after this webinar via email. And please, we'd be happy. I know us and Penny from Advisors will also be happy to have a quick call to see how we can better help you guys. I think looks like we're good to go. Again, thank you everyone for joining. Thank you, Ammar. Thank you, Hani. Appreciate both of your times and your insights and your input. And yeah, we look forward to speaking with you guys again very, very soon. Wish you guys the best of luck. Have a
Thank
great
you.
day.
Thank you. Thank you, everyone.
Thank you, everyone. Thank you, everyone. Happy to answer any question anytime, of course.
Thank you, Hani. We look forward to
Always.
speaking with you.
Thank you. Take care.
Cheers.
Bye-bye.
Thank you, guys.
Bye-bye. Bye-bye.
Have a great day. Bye.